Hey guys, JD here. So in this video, I wanted to kind of clear the air on the top-down analysis because I keep getting this question. So I believe without trying, kind of led people astray on what I do on a daily basis. Cause I know I did have a video where I went to a day chart and then I was like, I'm only looking for loans because it's an up day, but I do not do that on a regular basis. Not at all. I kind of do that from habit of when I did do top-down analysis in the Forex trading fibs. But in binary options with price action, you do not need to do that whatsoever. Matter of fact, you probably shouldn't. So let me say it right now for my students, don't do that. Because if you look at the day chart, it's probably just going to give you a bias that could be detrimental to your trading day. And so let me explain. So first, let's start with a question. How much time is an hour out of 24 hours? Out of a day? It's not that much time. An hour out of 24 hours is not that much time, right? But how much is an hour on a minute chart? Well, it's represented right here. From this vertical line to this one represents an hour. So let's see how much price action can take place in an hour of time. So if we just start here, right when we're coming into the zone, you gotta push down first entry, push down second entry. You could have took this one, either one, they both work. Boom, you're off to the races. But then you're reading the price chart. You got a trend up, trend break, retest a new high. Now this market cycle is over. So now you're looking for shorts, and you also get a first entry, second entry short right here. Take either one of those. You're in the ball game, right? Then you drop down, you get a high, push down, lower high. You don't take this signal candle, but just for this illustration, let's say you did, and that's a good one again. Then you drop down here, you got a new low, first entry, second entry short. You take that right off the EMA, drop down, that's easy money. You get another new low, push up, first entry, second entry short. Look at that beautiful signal candle. Trapped everybody going long in a downtrend now. Didn't close on this low, but that's a beautiful, I still call that a falling hammer. Not to mention, you can see 1, 2 legs back. 1, 2 legs back. Just what we want to see. Coming back down. You take that, boom, off to the races. Then even if you take this one, being more conservative, and you get the close under the EMA, another beautiful signal candle, you take that, boom, off to the races. That's a great run, right? That's 1, 2, 3, 4, 5 very solid trades. Well, at least 4 of them. Very, very solid. But here's the catch. If you go to the day chart, it was an up day. That was an up day. All those beautiful, beautiful entries happened in an up day. So if you had looked at the day chart first, you would have definitely had a bias going into this moment, going into this hour. Because see, nothing matters but the hour you're trading. You know what I mean? It doesn't matter what has happened all through the day. The only thing that matters is the time that you're currently trading. And so you have to read the market and trade for the current market condition, because nothing matters except for the hour that you're trading in. So in this particular hour, if you had the bias of going long, you would have got 8. So you would have won here. You might have took this one and you would have got 8. You might have took this and you shouldn't because it was a first entry. But if you did, you would have got 8. But maybe you took the second entry right here. Guess what? 1, 2, 3. You got 8. Then maybe you said, all right, I got a low, push up, higher low. Let me take this one. You take this one right here. 1, 2, 3. You got 8. See what I mean? Because you had a bias of going long, you would have gotten destroyed on this little push right here. That's why we don't trade that way. Forget what's happening on the day chart. Forget what's happening on the 4 hour. Forget what's happening on the hour. This is just one more thing that price action gives us. We don't have to confuse ourselves by looking at all those charts. We don't need confluence. We don't need top down analysis. What we need to do is follow the market cycle, trend up, trend break, retest a new high, rule of two, trend down, trend break, retest, and take price action setups, second entries, higher lows. That's all you have to do is trade what the market is currently showing you. What happened, in the last 6 hours, it really doesn't matter. What's happening right now, this very minute, that's what matters. And so that's how I trade. I kind of look at the day chart out of habit, but I don't do that every day. I mean, when I open my chart up, it's on the minute chart, and I instantly go to reading price action. Okay, what's been the most recent price action? That's it. And if you did it here, you saw that you had a trend up, trend break, retest a new high. So this market cycle is over. Let's look for shorts, and you get 4 good ones right here. Boom. So that's how you do that. So let's jump into the real chart lesson for today. But I wanted to clear the air. Me and my students don't even look at the day chart anymore. Practice reading the price chart in the current market condition. There you go. I also want to just say, I learned price action on a 2000 tick chart, which is way faster than a 1 minute chart in the futures market. And it's designed to do a scalp that hopefully goes into a swing trade. And so we're only scalping. So this minute chart, you're going to have, and just this was 1 hour. If we had to put it to 2 hours, you basically had a trend up and a trend down in a 2 hour time frame. So again, just follow the price action. That's what's beautiful about price action. We can keep it simple. One chart, one EMA, one zigzag if you want it. You don't even have to have that. And that's it. We keep it simple around here. All right. So let's look at today's action. So I'll go through this quick so the video won't be too long, but it started off with a rally-based rally right here. We went up, then you got the new high right here. Then you got to start counting. First entry, second entry long right here. 1, 2, 3. You take that. Then this one, I maybe should have marked differently because I got it as a first entry, second entry long again. But this candle really broke higher, so you're supposed to restart the count. But I can see 2 legs back of red. 1, 2. So I like this one. Boom. 1, 2, 3. Then you get a low, push up, higher low. This low is higher than this one. You get a decent signal candle. I would have rather it closed up here, but off of the strength of this push here, I feel I'm okay with this trade. 1, 2, 3, and it's a home run. Then it gets kind of choppy through here. This is a little dicey. You really want to kind of sit on your hands. But you're expecting it to kind of break out to the upside because this is, again, a pretty decent trend. So you got the high right here. First entry, second entry long right there, right off the EMA. I'll take that. 1, 2, 3. Now, these signal candles aren't big, but you got to look at the current market condition. Nothing is big. It's just smaller candles in this little run, which makes this trend, you got to begin your count on to enter correctly. And sometimes decent trends are like that. Sometimes a decent trend, it's just hard to get an entry. Sometimes in a strong trend, you just won't get an entry. So a great trend is not always the best for entries. It really not. Sometimes a really good trend may only have a couple entries. So the market is funny, but this is why you have to do chart lessons so you can start to recognize the different type of trends, the different type of rhythms. The market moves differently every day. Every trend doesn't move the same. Every range doesn't move the same. So there's strong trends, medium trends, choppy trends. The market has a lot of faces. That's why it takes time to get better, because you got to be able to find the rhythm. But coming down, trend down. Oh, wait a minute. I'm sorry. Down, up, first entry, second entry right there. Take that. 1, 2, 3. Then push down. That's just a first entry, so you miss a pretty good run there. But then you get another low, push up, higher low. Still just recently off the EMA. I like that. Just recently went off the EMA. I take that. Easy. 1, 2, 3. Easy money. This one here, too far away. Now you got to wait. Got a new high in place. Cool. We push down. First entry. This is the first trend break. Look at this beautiful candle. Trapped everybody going short. Closed on its top. Boom. First entry. Second entry long. with the first trend break, expecting that we're at least going to retest to here. I love this trade. This is the home run of the day. 1, 2, 3, up, boom. All right. Then you get a high here, push down, up, first entry, push down again, second entry. Look at this candle. Hit the EMA, shows strong rejection, close on this top. Not the biggest candle, but again, today hasn't had huge ones, but it's off the EMA. I like it. 1, 2, 3. Then one last go. You got a high here, push down, up, first entry, push down, up, second entry, right here. This one I would have rather it close back above the EMA, but you know, you probably maybe thinking you're gonna get another leg like this. This one ain't quite there. It's close, but this would definitely be the last of this uptrend. This is basically this is the better trade to end it on. I would start getting skeptical around here, especially because this candle broke lower and closed on its low. So you gotta be careful. This one is a little bit riskier, but per the count, it's a second entry long and it works. So that's what I saw today. You know, so you had to get your count on today, or watch the colors, look for the 2 legs back. But there was 10 trades here, 10 good trades here. But what I want to point out is something I say all the time. For all the new people, you may have never heard me say this. The best entries are always off the EMA, right? Right here, off the EMA, off the EMA, off the EMA. Under the EMA, but near the EMA. This one coming back to the EMA, which I love kind of even better because I know the EMA is going to act as a magnet. This one off the EMA. The best entries are normally off the EMA or near it. So when you're in a strong trend or any trend at all, use the EMA. When you're trending up, use the EMA. So like using the EMA will keep you out of taking this second entry, like first entry. This is a second entry right here, but you're way too far away from the EMA. So using the EMA will help you skip this loss and wait for this win. Oof. I just preached right there. So that's the lesson for today. Again, thank you guys for, hanging in here this long. Of course, I have a trade bonus for you. And so please take this moment to like, share, and subscribe for your boy. If you're brand new, you definitely want to subscribe. You are going to learn on this channel. So stay tuned. And tomorrow I got something special for you guys. Definitely want to tune in tomorrow. We're going to be talking about the mental game and the things that you need to conquer and the things that you need to build, because you need to know who's playing in the game. And it's going to shock you when you figure out the players that's in the game. So stay tuned for that tomorrow. But that's it. So, hey, check out this trade example. I hope you like it. I'm signing off. My name is JD. And as always, I wish you increase on the Sutton. Bye-bye. Hey guys, how's it going? JD here. Today is October 17th, 2023. And time to clock in. We're looking at the Euro USD. It is in a beautiful, beautiful uptrend. We're hoping we can miss it. Hopefully it keeps continuing. See, it is beautiful and it's early. So hoping we can catch a ride here. It's hitting some, well, nope, it just made a new high. So we gotta count off the top here. This is the first entry it's making right now. So we can get another leg back to the EMA and bounce. The trend will continue. Hopefully that's what happens. We'll see. That's what we want. That's the first entry. Push down and show some rejection for the second entry. Be wonderful right here. All right, we're almost in play. It's the first entry coming down now. We can see 2 legs back. They're small, but everything here is small. That'll help it look a little bit better. We want this candle to push down, show some rejection, then push up. Perfect. Come on down. First entry, second entry. We're hoping we can get another leg like this, and that this is going to be the center of the pattern. There's the rejection off the EMA. Could not push under. Getting some rejection. Make sure we locked and loaded. 92%. Okay. All right. Pretty nice. Oh, pushing down first. Just what we want. Now we want this candle to show us the rejection. Drop lower, try for everybody going short, and then turn up into a beautiful candle and close higher than here. That would be ideal. If we get the break and close under the EMA, we'll need to be careful. We want to see some real rejection. Dropping, leaving stems. Keep leaving stems. All right, broke lower, kind of got a matching bottom. Pushing up strong. We break here. This will be our first entry, second entry long. With trend. Expecting that we're gonna get another leg like this and continue this beautiful trend up. I mean, really from here, this is the first trend break. I don't count this. This is the first really good trend break. This was too shallow. All right, we got a big candle, now a little candle. That could be a sign that this down poof is running out of steam. Depends on how little the candle get. Oh, another big candle. So still got some power left here. Now we're getting a little distance from the EMA though, which we like, because we know we're gonna come back to it eventually. And if we come back to it with a first entry, second entry long, that'd be even better. Further away from the EMA we get at this point, the better. That gives our trade more room to make it back to it, to act as a magnet. So we want this to actually keep on pushing down. I don't have a problem with that. The further it gets away from the EMA, when that signal candle comes, all the better. We want the EMA to act as a magnet at this point and pull us back to the moving average. Here we come. The first entry, second entry long. 3 minutes. Let's go. Money time. We're in. We're expecting a first entry, second entry long. 3 minutes. Expecting we're coming to get back above the EMA and go to new highs. Perfect call, perfect price action.
We would like to thank you for tuning in to another Increase episode with JD. If you want to learn how to price action trade, please visit www.jdhyder.com and you will find his brand new course, IOTS, Price Action Trading System. We thank you again, and as always, we wish you increase on the sudden.